What's going on, you guys? Welcome back to the channel. Economic Prepper here. I hope that you guys are doing very well today. I've got some really insightful information for you guys that I want to share with you. I want you guys to prep. I want you guys to prepare for what is coming. And this could be a very, very big wave that a lot of people are not going to be prepared for. And you don't have to be one of them. So if you are new to the channel, please consider hitting the like button for the video. I really appreciate that. Also consider subscribing to the channel. I'd love to have you guys here. So let's go into the first thing. So the first thing I want to cover with you guys is the Fed, right? So obviously inflation's 8.6% now, according to the last reports. But of course, you've been following the channel for a while. We know that inflation's a lot higher than that. And the CPI inflation meter that the government uses to determine how much inflation we have, it doesn't include a lot of things that we pay for. So it's obvious that it's not an accurate reading, but we'll go with it for now. It says here that the Fed will hike rates by 75 basis points this week, and it should push the US dollar to record highs. All right, so we've already seen some of the implications of these Fed rate hikes, and they've been rather swift, and it looks like this is going to be the most aggressive Fed rate hike that we've seen probably in the last 20 years, possibly 40 years. So if you guys remember, the first rate hike we saw back in March was 25 basis points. The next rate hike that we saw last month was 50 basis points. So that was a progression, that was a gradual increase in their aggression in terms of raising the interest rates. The next one that we're expecting, according to Jeffries, is 75 basis points. It says here that Jeffries predicts that the Federal Reserve will raise interest rates by 75 basis points this week. Jeffries upped its call from 50 basis points after the May inflation reading hit a 41-year high. So basically, we've already seen the Fed basically fumble the ball, and they felt that, if we go back several months, right, they felt like, okay, inflation is going to be transitory. We can wait. We don't have to raise interest rates a year ago. So ultimately, they raised interest rates for the first time in March, and it wasn't enough. They raised rates again, but a larger increase the following month. And now, due to the fact that the CPI or CPI has continued to increase in the face of these recent rate hikes, they have to become more aggressive. And with this aggression, we are going to see higher and higher prices. We are going to see, we're probably going to end up seeing a recession very soon. Many reports were coming out previously saying that, oh, we're not going to see a recession until at least 2023, if we even see one. And if we look at Jeffries' prediction alone, the fact that they went from predicting a 50 basis point rate hike from the Fed to a 75 basis point prediction from the Fed, we already know that things are getting out of hand, and they're trying to put a lid on this thing quickly. Now, some of the things that we're going to expect is we're going to see continued increases in mortgage rates. We're going to see an increase in credit card interest rate payments. So if you're carrying any kind of credit card debt, I highly suggest that you work your butt off toward paying off any kind of high interest credit card debt, any kind of high interest debt, period. But specifically credit card debt, because those rates are generally, in most 90% of cases, they're going to be variable. So when the Fed raises the interest rates, your bills are going to be going up, right? Goes on to say, Barclays on Friday switched its call to 75 basis points after the Bureau of Labor Statistics said that the consumer price index rose 8.6% in the year through May, in part as fuel prices zipped higher. An economist surveyed by Bloomberg had expected a reading of 8.3%. So basically, we got 8.6%. They were expecting 8.3%. So clearly they don't have a handle on this thing. Now, what's going to happen here is more businesses, more corporations. I don't care if you work for a small mom and pop business, if you work for a large Fortune 500, Fortune 100, Fortune 50 company, may or may not be listed on the stock market. You're going to feel and see tensions rise. So prep, guys, prep now. And I'm talking about prepare. How do we prepare? prepare financially, prepare economically, through building up that reserve, building up that emergency fund, creating additional streams of income. Uh, uh, Many of my viewers are buying more gold. And I'm starting to see more people in the comments saying that they're buying silver. Let me know if you guys are doing either. Now, here's what's really concerning. So whether you work for a big Fortune 500 company or a small mom and pop company, we've already seen the stock market plummet. We're essentially in a stock market crash right now. Roughly speaking, the S&P 500 is down about 20%. NASDAQ is down about 28%. Bitcoin, Ethereum, XRP, if you're looking at crypto to hedge the inflation, it wasn't there for you. We've been looking at the cryptocurrencies over the last, several months, and in the face of record inflation, we're seeing a crash in the cryptocurrency market. So that expected hedge to combat inflation really wasn't there in the crypto space. Now, going to expand on the rising of interest rates and the direction that we're going to be headed, I want you guys to be aware that more and more companies are going to be fearful and apprehensive about the future of their business. At the end of the day, these corporations, they're not here to take care of us. They are here to make a profit. Their fiduciary responsibility is to the shareholders. So I want you guys to pay very close attention as these rate hikes continue to come in. We're going to see more and more layoffs coming. I don't know how many of you guys were around in 2008, or if you remember 2008, where we saw unprecedented levels of layoffs. Now, that was easily the biggest economic collapse that I've ever seen, I've ever experienced. Personally, I've read about economic collapses earlier than that, but I personally wasn't around to experience them. With increasing interest rates from the Fed, I'm expecting a lot more people being laid off going forward. Coinbase just released Coinbase just admitted that they're about to lay off 18% of their staff amid a crypto winter. Now, Coinbase is one of the larger facilities for being able to access or purchase and trade, invest in, liquidate cryptocurrencies, right? So Coinbase says they're going to lay off 18% of their workforce amid plummeting cryptocurrency prices and a global economic slowdown. This is what the company announced on Tuesday. This is, today. CEO Brian Armstrong, he told employees in a memo. Did you guys hear that? We got storms coming in, and wouldn't surprise me because it's like 102 degrees outside right now. Anyway, I guess that's more global warming, right? Anyway, says here, Coinbase CEO Brian Armstrong told employees in a memo that the crypto exchange needs to keep costs down to survive a bear market, which requires a different mindset to navigate. See, this is exactly what I'm talking about, guys. Big companies, I want you guys to take this into consideration right now, right? Coinbase is letting go 18% of their workforce. This cryptocurrency has grown and expanded to a rate that we haven't seen in hardly any other sector. And so one of the biggest growth sectors is pulling back on nearly 20% of their employees. Guys, this is huge. I don't know how many of you guys happen to have caught the previous Super Bowl. You saw all sorts of cryptocurrency companies advertising on the Super Bowl. These companies would spend $4 million on a 30-second ad, right? These same companies are now just chopping heads, and so many people are not ready for this. So many people are not prepared. They didn't see this coming. So I want you guys to know that this is only the beginning, and it's about to get worse. And not to freak you out, I'm not trying to spread fear and panic. I want you guys to just understand, look, guys, stuff's about to hit the fan, and I want my community to be aware. Definitely share this video with someone who needs to hear this information. Bitcoin, maybe 6 or 8 months ago had hit a record high of nearly $60,000 per Bitcoin. Bitcoin today is right around the neighborhood of $25,000. So I just want you guys to just, even if you don't follow cryptocurrency, you have to be aware of what's going on in the market, because even if you're not necessarily invested in certain asset classes, many of these asset classes and commodities are impacting the companies that you work for and will impact your job security. And going forward, today and going forward, job security is going to be, no matter how much you prep, you're going to need money. Bottom line, you can't fill your pantry unless you have money, unless you have cash, unless you have income coming in. So this is going to affect everyone. All right. It goes on to say that, quote, "We appear to be entering a recession after a 10-year economic boom," he wrote. Now, this is a massive financial institution. And not only that, but it's a leading cryptocurrencies, as you guys know, it is the leading, it's the frontier of economic advancement in terms of, or at least from a currency standpoint. And they're saying that we appear to be entering a recession after a 10-year economic boom. Quote, "A recession could lead to another crypto winter and could last for an extended period. In past crypto winters, trading revenue, our largest revenue source, has declined significantly." So what this tells us is that they're saying that their trading revenue, these companies, these corporations, stock brokerages, crypto brokerages, these brokerages make a crap ton of money in a lot of different, they have many different revenue streams, but one of the bigger revenue streams that they have is their trading volume, the revenue that they generate from trading. People who are trading on these cryptocurrency platforms, they're people like me and you, and they're seeing that the trading revenue has declined significantly, they're saying. So this is telling us, see, this is one of the warning signs that we can see before everything just completely falls apart. This is one of the warning signs that we need to be paying attention to. So they're saying that people like me and you are not trading as frequently. Also on these trading platforms, on these brokerages, they're big hedge funds. There are big corporations that are investment bankers. They're on these platforms exchanging currencies, trading stocks, and different equities, and they're saying that they're pulling back, and they're seeing it first. So we have to prepare. We have to not just hear this information, but we have to take action. We have to prepare. It says here that the announcement comes after cryptocurrencies took a beating to start the week. Bitcoin has plunged nearly 20%, a nosedive that was spurred by crypto lender Celsius Network's decision to prevent users from pulling funds due to extreme market conditions. Now, this is really scary, guys. They have literally stopped people from being able to pull their money out. I don't know if you realize how scary this is. They have prevented users from pulling funds due to extreme market conditions. So are we not able to trust these institutions? This is crazy, guys. The total crypto market cap has lost $2 trillion in value in less than a year and recently dropped below $1 trillion for the first time since early 2021. So that means that the crypto market cap has dropped more than 50% in the past year. This is scary. And to the extent that these financial institutions at the press of a button will just prevent users from pulling their funds out, that's very scary. So I want to share this information with you guys because, in my opinion, I think it would be very wise to have an alternative source of funds, an alternative source of cash, currency, gold perhaps, cryptocurrency on a cryptocurrency on a wallet, on a hard wallet, not just in the cloud somewhere or stuck in some brokerage. Because in the event that a financial institution decides to just go ahead and block your access, hit a switch because they're scared, and hold on to your money and prevent you from being able to take your money out when you need to buy groceries for your family, or you need to pay your mortgage, or you need to pay your rent, or you need to fill your car with gas. You don't want to be at the whim, you don't want to be at the mercy of a financial institution telling you, oh, well, due to severe extreme market conditions, we're not allowing you to take your money out. You go ahead and log into your bank and let somebody tell you that you can't take cash out. We're going to see a society that we haven't seen in the last 100 years. So anyway, guys, I'm going to leave it at that. I wanted to share this information with my community. Drop me some comments. Let me know what you guys are thinking about. Let me know what you guys are doing to prepare. And let me know what you guys want from me going forward on future videos. I'm going to continue sharing information. I'm going to continue to monitor the markets, monitor our economy, and just continue to share helpful economic preparation information that I can with my community. We're going to make it through this, but the only way we're going to do that is if we're paying attention, we're preparing, and we're paying attention. We're preparing, we're paying attention, and we're getting ready for the next wave. Remember, multiple sources of income is definitely going to be not nice to have. It's going to be a requirement going forward, because especially with layoffs, if you're single, if you only have one source of income and that source of income dries up for whatever reason, whether it's layoffs or whatever, it's going to get really scary. So I don't want anyone to have to go through that. I've watched many people go through that back in 2008, and I have a feeling, and based on what we're seeing early on, and they're not telling us, this is the thing, many of these news channels, they're not saying how bad it's going to be. Most people are saying, oh, we might not even have a recession. What we're seeing right here is not congruent with the messages that they're sharing. So I'm just going to leave it at that. You guys made it this far in the video, drop a like. I really would appreciate that. Also subscribe to the channel, share this video, and I'll see you guys on the next one. Take care.